Today's verse of the day, Galatians chapter 6, verse 9. And let us not grow weary of doing good, for in due season we will reap if we do not give up. There's always a gap between planting and harvesting. A lot of people give up too early before they see the things that they planted grow into a beautiful result. But the problem is, people just give up too early. They jump ship way before the results have finished producing themselves. So if you're one of those people, you're dealing with a lot of struggle and you're going through the motions and process of growing, it's just growing pains. Remember that everything you're dealing with is a season. You have to overcome these seasons in order to obtain the results that you're looking to obtain. Otherwise, you're going to continuously miss out on your opportunities and your growth by continuously jumping ship over and over and over again. So you have to stay the course even when it's hard and even when it's difficult. That's the time when you have to show up the most. And you have to show up consistently. You can't just show up and expect it to fall in your lap. No, because nobody told you it was going to be easy. So you signed up for this and you wholeheartedly understood what you were risking and what you were getting into. And if you didn't, now you know. So now that you know, it's your decision to decide, are you going to stick through it and stay consistent through character, through business, through faith? Or are you going to just waver and fall under pressure? The choice is yours. With that being said, let's get to the charts. What's going on, y'all? Welcome back to another market recap. It's your boy CV checking back in with y'all. Hope you guys are doing well today, having a beautiful, beautiful Sunday. With that being said, let's get right to the charts. Here we have the Monday chart loaded up on QQQ, 5-minute time frame. As you guys see, we had some interesting price action going into Monday. Let's see, from Friday, we pretty much were in the same range from the 608 level to 600 level. And so we opened right in between those ranges going into the day at $606.50. From there, we formed an orb level between we formed an orb level between 608 and 604. So about a $4 range. All right, and from here, we saw some failure coming in off of the EMAs, but we weren't failing to close below the orb. We were kind of holding that orb low for a second, but then we started to see failure after a while. And so around 9:05 is where I looked to take my initial entry. Once we got confirmed closure below the orb, here, I decided to take a position and then use the EMA closure above the EMAs as a stop loss, because I seen that it kept projecting this level back to back to back. So I said, cool, I have an ideal idea of where this may fail. So from there, I held this position, looked for possible re-entries for a size into this position. And so I did just that once I got this confirmed failure here on this candle. From there, we fell all the way back down to 600. And so I took profits around here pretty much, no, not there, sorry. I took profits pretty much once we got to this downside. I did take initial trims once we got back to my initial entry, and then I held the rest of this position and trimmed the rest after we got down to this level around 600. And from there, I was fully out of that position. That took place within 14 different entries and exits due to my inability to just hold that position. Monday was a very chaotic day for me. I was just trading a lot of positions, and I should have just really held one position and just stayed patient, because this trade took from 9:05 all the way to 10:05. Essentially took an hour of price action, and I was just very impatient with the way it was moving. It kept just chopping, even though it was holding this downside move. From that point on, I don't know what I was doing. I was all over the place looking at different charts and doing too much. But essentially, once we caught that trade and we got out of it, we were done for the day. And the price action then pretty much range bound between 600 and 602.7. and we continue to see failure later in the day. I did look for re-entries around that level because I saw that was a level that previously held on Friday, even though it broke above the EMA. Sometimes your EMA is going to fail, and when your EMA fails, you then want to look at demand levels or resistance levels that are pivotal in the market that can, give a key indication that, okay, if this price breaks, then we'll see higher or we'll see lower. And so that was one of those levels on Monday for this particular name. So you just want to keep a lookout for those kind of opportunities in the market to catch a quick reversal back down to see more continuation on your trade. But with that being said, let's move on to Tuesday and talk about what we took on Tuesday. All right, you guys, here we have the Tuesday charts loaded up on the same ticker QQQ 5-minute time frame. So after we formed our orb high, we were pretty much reclaiming the 602 level. After we reclaimed 602, we then pushed higher, going all the way back up to 606. But we formed an orb between 600 and the 605 level. And so we got a little bit of a break above that orb high, but it wasn't with enough conviction to me that showed signs of, continuation and strength. So I just continued to watch the first 30 minutes of the market, and then after I saw initial failure below this EMA, I got indication that this could possibly break and go lower if and when we see another failure below this orb high. And so that's exactly what I took after seeing this first failure to get above it, and then the second failure to get above it. We took a position here on this candle at the very top of this position, and we drove it all the way back down to 603.50, where we then took majority of our size out, and it ended up reversing and bouncing once again, holding that EMA after the fact. And so I was completely out of this position once we reclaimed and reversed back above this candle high. And that was it. That was the only trade I took. It was way less chaotic, and I was way more controlled because I was just focused on one chart and just dialed in on that chart. A lot of times you want to reduce your attention span to all these other charts and opportunities, because there's opportunities on a lot of these different charts. You just have to find one opportunity and execute it really well, and you'll see a really good consistent result. And if you do it consistently, you'll receive the same result over and over and over again. So that was my focus going into the remainder of the week, because I didn't like how my approach was on Monday. And so you'll see that we took a lot less trades later in the week, but that was a trade we took on Tuesday. Let's move on to Wednesday. All right, ladies and gents, here we have the Wednesday chart loaded on the QQQ chart, 5-minute time frame. So on Tuesday, after the market closed, going into Wednesday, we had a gap up in the market, and so we opened the market at 611.1, where we then saw a push higher going all the way back up into the previous resistance zone of 615 to 616. From there, I essentially looked for a reversal because I just seen that we were continuously running up, and as we were running up, we started to get lower and lower volume if you look down here at the bottom. So as we got that lower volume and we were approaching a resistance level, I was looking for a potential rejection. And so once we got this reversal here on this candle, I took a position essentially off of this failure here to get higher, and I was simply just looking for a reversal and retest back into the orb high of 614. And so we caught a move from 615.8 all the way back down to 614.1, and then we took profits from there. And I had an idea that it wasn't going to fail just because of the overall strength that we were having in the market at the time. The tech sector was doing really well, and it was prior to NVIDIA's earnings. And so given that the market was gapped up, I anticipated that, they were waiting on NVIDIA's earnings report to dictate whether they want the market to push higher or lower, because the majority of these ETFs and market shares are owned by NVIDIA. So NVIDIA has a lot of market cap into a lot of these ETF names, and you want to be mindful of those things whenever you're day trading. That what names if you're trading the ETF specifically, what kind of companies are owned within this ETF, and how much of an effect does that company have on this ETF? So you want to be mindful of those things and pay attention to those things so you know what you're trading, and you don't get caught in the middle of a bull trap or a bear trap just because you're not aware of the price action in the other names that you're trading. So this is something to be mindful of, food for thought. But yeah, we took that trade, and once we took that trade, we were pretty much done for the day. I didn't really look to take any other trades because I've seen that we were just pretty much chopping for the remainder of this day, and it just wasn't good price action there after that moment. So I went ahead and just stopped trading for the day, and I moved on about my day. So yeah, with that being said, let's move on to Thursday and talk about what we did on Thursday. Hey, what's going on, y'all? I just want to say thank you all for watching. If you guys are new, make sure to leave a like, comment, and subscribe. Also, turn on the notification bell. And if you guys want to learn more about how to day trade, I have a free day trading course on my website at www.continuebelief.com. There you'll get all the information and resources needed to help you guys learn more on your journey to day trading. I hope you guys enjoyed this video. Let's get back to it. All right, you guys, and here we have the Thursday chart loaded up back on the QQQ. Ticker symbol 5-minute time frame. So after NVIDIA reported their earnings, the report that they had was good, but it wasn't great. And so the market responded negatively. And that was kind of what I predicted on my Rich on Gains podcast. If you guys haven't checked that out, make sure to check that out. We release a podcast every Monday. But with that being said, yeah, we had a negative response to it. So initially the market opened reversing off of that previous demand resistance zone of 616, where we opened at 615.5. From there, we pushed all the way down to 612.72, forming the orb level. And we got initial failure out of this orb pretty quickly, going into the 950 candle. And so after failing below orb, we were looking for a position into this entry. However, I seen that we were approaching another level of demand, which was 608. So I wanted to tread lightly and kind of wait for that level to break as well, just to get double confirmation and be really confident in this move. And that's what we did. So around 9:10, I believe, is whenever we started to break this level. We had an initial wick below it, but then we wicked back above. Then this 905 candle came in, we went back below it, and then we finally closed below that 610 level. And so from 610, we then saw a retest again off the EMA, and from the EMA, we retested there, and we initially filled it. So as soon as we filled this EMA here, I took a position using that candle high as a stop loss. I was able to catch this move from 611.5 all the way down to 608.8, and I took profits fully from that candle alone, just because of the quick price action move that it did. I was completely out of this position, but I missed out on the remaining of this move from 608.9 all the way down to 606, and from 606 all the way down to 603.9. From there, it then reversed and went higher, which I did look for retests of this trend to see if we would get a continuation lower. We unfortunately did not. We had some slower price action going into like the 10 o'clock hour. And then from there, we had some more slow action going between 11 and 12. And then we finally reversed and bounced higher around 12 something and bounced back up above this 608 low. And so I believe I said 608 up here. It actually was 610 was the level that we were looking to see a reversal back below of, because that was a previous week high level. So we were looking for a reversal back below that zone. And so once we got a little bit of confirmation of the weakness continuing, we took the position. So that was Thursday. Pretty good trading session, and wasn't too hard. If you just could pay attention and recognize the pattern of the trend, you were pretty much able to capitalize off this opportunity. So with that being said, let's move on to Friday and talk about what we took on Friday. Here we have the Friday chart loaded up back on QQQ chart, ticker symbol 5-minute. All right, you guys, and here you have the QQQ charts loaded back up on the 5-minute time frame. As you guys see, we pretty much opened in that same range where we were from the beginning of the week, opening at 605, rejecting down to 602, but then bouncing, going back higher. Let me zoom in here, going back higher all the way up to 605.23, where we then formed our orb levels. From there, we were really looking for resistance and looking for failure back down, because we just had a very tight consolidated range, and it was closer to demand at the 600 level, but then we started to reverse and go higher back up to resistance levels. And so as we were approaching resistance levels, I was looking for puts on this position. So initially, I believe I took puts here after seeing that we were failing to go higher. It was somewhere in this candle where it looked like it was going lower, but then as it went lower, then went back higher. And so we got stopped out of this position. And then we look for another position after retesting this previous monthly low level around 910. Once we got that confirmation of a reversal with this strong volume increase, I then took a position on this candle. Using that candle as the entry and using the candle high as a stop loss, we look for a target back down to the EMAs. And then from there, we hit the EMAs, took profits on that, and I was completely out of this position. Quick and easy scalps. You guys don't want to overthink trading. You just want to make it very, very consistently easy and consistently convenient for you so that you're not in a position too long. Like I was in this position from 9:10 to no later than 9:15. You know what I mean? So no less than 10-minute trade, can really help set the bar for you and really help you get above the learning curve and get above the earning curve so you can earn money while you're trading. So that was the last trade we took on the week, and we were completely done for this week, closing out the month of February. Overall, we had a pretty decent month. We had some ups and downs, a lot of back and forth, but overall we had some really good trades that we took, and I was very happy with my execution going into this week, especially after correcting my execution on Monday. You want to be knowledgeable and mindful of your approach each and every day, because some days you might act out of character, and that acting out of character could cost you your equity in your accounts, your funded accounts. You could blow your funded accounts from not properly executing and sticking to your script or your plan and your system. So you want to make it very, very, very important and a requirement and mandatory for you to stick to your systems. Use your systems and stick to them. If it's working, stop trying to do other things that's not working for you. Do what works. Keep it simple. Just like Robert Kiyosaki says in Rich Dad Poor Dad. Keep it simple, stupid. It's not that hard. Stop overthinking it. Stop stressing, trying to make the most money in one day. It's not gonna happen. Take your cash flow, build your cash flow, and consistently get cash from the market, because it's possible. You just have to stop being greedy. But with that being said, that's it for the market recap. So now let's move on to talk about what we can expect to see going into the first week of March for next week. All right, ladies and gents, here we have the 4-hour chart loaded up on the SPY chart, ticker symbol SPY. Let's talk about the month of February, y'all. So, recapping the month of February, if we just look back, let's see, all the way back to the 1st of February, which was Monday, the 2nd, you just see this very, very, very wide zone here. If I'm gonna put a box around it. So we got February 2nd from right here, even the end of January, but from February 2nd all the way to February 28th, we were in a very range-bound zone from 676 to 696. So a $20 range of back and forth price action, and as we went to the end of the month, we got tighter and tighter, going from 680 to 695, and from 695 to pretty much 680 to 695. That was the initial zone that we ended up being in for the remainder of the month of February. So what can we expect going into the first week of March? The levels to watch are going to be dependent upon where we open on Monday. And the reason I say that is Trump announced that he's attacked or launched rockets on Iran in response to Iran shooting missiles at US bases based around the Middle East. And so typically whenever there's news about war, the market responds negatively. So if we get a negative response on the market, given that we close at 686, we could see a gap down below 680 going into the 670 range, 675 possibly. And then from 675, if we fail below 675, we can see a push down to 670. And if we fail 670, we can see a push even lower, back down to 660. And then it will probably be off to races from there, depending upon how much fear and uncertainty kicks into the market going into the beginning of the week, like I said. However, if we hold this current level of 686 or 685, and we're still holding above that level, we can see a possible retest into 690. And then if we break back above 690, we can see a push higher going to 695. If we break 695, we can then see a push higher from there, going to 696. If we get back above 696, we can be in the position to possibly see new all-time highs. So those will be your levels to watch going into Monday and also going into the remainder of the week. Because like I said, if and when we fail these demand levels that we're holding currently, which is 680 and 685, we can definitely see pushed down to 675 or 676, somewhere within that range going into this week. And then if we hold these levels, like I said, we can see a push back up to 690. It's crazy times we're in right now. So given all this, all we can do is control the controllables and just make sure to stay safe and, keep your family close, spend time with your family, and, just keep operating and maintaining life as normal. We're blessed to be in a country that isn't impacted enough by those things to where it affects our day-to-day lives. But there are people out there in this world who are affected by these things. So you want to be thankful for what you have and really keep those things in mind. Don't take these things for granted, because things could be a lot worse. And, they're not at the moment. So just be thankful for that. But that's it for me, you guys. I hope you guys enjoyed this episode. Make sure to check out the Rich Arcanes podcast. Releases every Monday at 7 p.m. There will be a new episode coming out tomorrow, where I discuss more about the Trump-Iran war, and also talking about all things economically with the Netflix deal that they just didn't go through because Paramount came through with another offer for Warner Bros. And a whole lot of more things. So thank you guys for watching. I hope you guys enjoyed this. I'll see you guys next time. Stay safe, stay blessed.